So hello everyone, welcome back to our YouTube channel Exchange Experts. So in today's video, we'll be seeing about what are the trades that we took today and analyze those trades. So we have actually started this May month with an initial capital of 10,000 rupees, and we are gonna trade for the entire May month with capital of 10,000 rupees, and we'll be discussing the net P&L at the end of this month. So we'll just analyze today's trade. So the first trade that we got was with Indus Tower. So the price had broke the yesterday's previous day's high, and it has a nice 5 minutes candle close. So we have just entered above the close of the second candle, and our stop loss was right beneath the zone. So yes, it did hit our stop loss, and our position sizing was based upon our initial capital, that is 10,000. So basically, there is this when it comes to risk, there is a rule of thumb which is do not lose 2% more than a day. So basically what we did was we have divided those 2% into 0.5% risk trade. Here we have risked 0.5% of 10,000. So basically 1% comes under rupees 100, 0.5% would be rupees 50. So we can trade in such a way that our maximum loss would be around 50 rupees for whatever quantity that we choose. So we have entered with 20 quantities in Indus Tower, and our stop loss would be around 359.25, I guess, if I'm not sure. So yeah, our stop loss would be 359. Our entry would be 362.50, and our stop loss would be 359.10. So yeah, we have aimed for at least 1:1 risk reward ratio. Indus Tower unfortunately did hit our stop loss. So yeah, so that's all about Indus Tower, guys. So our second trade would be with REC Limited. So if you see, REC has opened above the previous day's high as well as previous day close, and it had a nice 5 minutes candle closed above the previous past resistance. So our right entry would be the very next candle, which is 9:20 candle, which is the second candle of the day. But we did miss our first entry, and if we did enter in that candle, our risk would have been much lower when compared to our actual entry here. So our entry would be around our entry would be with 535 in this case, and price at our stop loss would be around 522.25, and price had given us first it has went higher and higher, and it had achieved 1:1, and then it went higher, and the high of the day it made was around 557 rupees, people. So yeah, so our initial risks for this trade would be rupees 50, which is predefined, and we do have a specific SL for each and every trade. So that SL gets divided by the whatever risk amount that we get in order to get the total quantity that we need to buy. So in this case, so the risk for the trade for each quantity will be rupees 13. So 3 into 13, which gives us rupees 39, whereas 4 any more quantity would have been more than my 0.5 risks per day. So it has just calculated in such a way that I need to buy 3 quantities in order to meet my 0.5 risk criteria per day. So I did enter with 0.5%, which is 3 quantity, and we do close this trade at I think 550 rupees. Yeah, so yeah, we did sold REC at 550 rupees, which is more than 1:1 risk reward per ratio. So I think REC was a good trade. Yeah. So moving on to the next trade, I think we had a good trade with Marico. Right? So in case of Marico, the price opened below previous day close, and it did went, and the price had reversed from a zone, and then we have entered near the opening. So price did came back to the opening, and we have taken a trade over there. So we have actually entered with a very tight stop loss. So yeah, we did enter at 518 rupees. So our risk was around 517 rupees. So yeah, we have actually bought 66 stocks in order to meet the 0.5% risk that we defined, which is 50 rupees. So in case of Marico, yeah, it did achieve our target. In fact, it have achieved 1:4 risk reward ratio. right? So the stock gave around 522 in this case, correct? So yeah, we have entered with the 66, but we have actually exited our position at 1:1. And yeah, so if we would have holded this trade, we would have got 1:4 risk reward ratio, which is basically more than 1:3. Usually the trader aims for. So yeah, we've achieved 1:4 in this trade. And in case of REC, yeah, we did achieve 1:2 almost. And in case of Indus Tower, unfortunately, it did hit our stop loss. So the overall P&L was actually in green. Yeah, so our total P&L for this day would be 40.60. So we have traded with a capital of 10,000 rupees, and we have a rule that we are not gonna trade, or we are not gonna risk more than 2% of our capital in a day. So that's it for today, guys. Hope you have enjoyed this video. And what's more important in trading is that it's not simply that you take trade and you make money. So apart from that, journaling your trade is the most important thing in trading, because fast forward 30 days from here, and we would have reached May end. So if you would have asked me what are the trades that we took and what are the logic behind it, I would have be absolutely clueless about why I'd have taken this position, and why have I exited in this position, and why have I holded this, and yeah, so many things would be like I'll be having no idea about it. So in order to learn from whatever mistakes that we did, and to not to repeat those mistakes again, trading journal is the most important thing. So if you've been trading, you know the importance of the trading journal. And journaling alone is not important. Reviewing those journal is much more important than journaling. So we come to know what are the mistakes that we did, and make sure that mistakes won't happen again. So if you do this correctly, you can become a successful trader. If you want to invest and trade in stock market, you don't have any clue, so do follow our YouTube channel for more information. We'll be posting daily videos. This series will go for until May 30, and I'll see you guys in the next video. Until then, you go self-made and make impact. And if you like this video, make sure you do like our YouTube channel and subscribe to our YouTube channel. So I'll see you guys in the next video.